because
Yeah.
the U.S. government just classified it a strategic metal and or a critical mineral. China is now massively curtailing exports. The exchanges are bleeding silver every single month, including the COMEX, and the LBMA, which is in backwardation, meaning there's more demand for the bars than there are for the contracts right now. This is structural, and it's getting worse. I think silver has not been allowed to express itself in price because the military-industrial complex has been holding it down, and that's not just in the United States. That's all around Western Europe. They've held it down to build high-tech weapons.
Something huge is happening beneath the surface of the global financial system, and the public has no idea. Silver, once overlooked, is now being weaponized by nations that understand its power. The U.S. just classified it as a critical strategic mineral. China has cut silver exports massively. India's imports just hit their highest level in 15 years. And in the last few months, over 1,300 tons of silver quietly vanished from Western vaults. One LBMA insider even admitted that the float is almost gone. Meanwhile, COMEX and LBMA are stuck in persistent backwardation, something that almost never happens unless physical supply is drying up. Silver lease rates in London just spiked 200% during the last delivery cycle. Funds tried to borrow bars in Zurich and Singapore and were told there wasn't enough inventory. And instead of rolling contracts like before, countries including China, India, Russia, and Saudi Arabia are now standing for delivery, draining the West of physical metal. According to Andy Schectman, this is the moment the West never prepared for, the point where physical demand overwhelms the paper game. And if a major bank fails to deliver silver, it won't just damage COMEX. It could trigger a global financial shock.
And you need huge amounts of it to build high-tech weapons. And the countries that have exploited the delivery mechanism over the last few years for a long time were not sophisticated, coordinated, or motivated enough to do this. They are now, and wealthy. And you look at India, you look at Saudi, you look at China, you look at Russia. They're all massively buying silver. And they have been doing so because they know it's the Achilles heel of this entire Western system. And, because why? Because it's the big Western banks that are massively short. Well, okay, so they blow up on their silver holdings. Really? They have holdings everywhere. Remember going back to trust? Well, if they fail to deliver on silver, what does it mean about their interest rate portfolio, their equity portfolio, their FX portfolio? It means I'm getting away from that bank. And it's a bank run. And the systemic contagion is who knows where it goes. This is why I think you're seeing a lot of banks trying to exit gracefully from the short position side. Someone's going to get left holding the ball. But when you see, literally structural backwardation since October that we still see now, I've never seen that in silver for more than just a couple of days. Now we're pretty much going on 6 weeks for the most part, with a brief moment or two of it going into contango, which means that's normal. Spot is lower than futures. It's signaling that there is great tightness and stress in the industry. And you can see the exact same thing with SLV, where to borrow the shares, it had gone up to 20% borrow rate. Well, who's good? And you would borrow them in order to cover, right? Because you can short SLV too, which has the same effect. And if no one is lending the shares, there were zero to buy last month, zero across the globe. And if you could find them, the rates were at 20%. The lease rates to buy bars or to borrow bars from the LBMA went up 200% at the same time during the last delivery cycle. Are we going to see that again now? I don't know. We'll find out in 7 days how many of these contracts stand for delivery on the 28th of November. It should be a very interesting day to see just how many stand for delivery. I'm expecting a lot. I think silver, look, Bank of America said $67 next year is their target. That would be a low end. And if you take the cup and handle, which is a 45-year formation that we've seen technically, you take the top of once it breaks through the 50, which it did, you take the top of the cup and the bottom of the cup, 50 and 4 in the early 90s, 50 in 1980. The difference is 46. You add it to the top of the cup, 50 plus 46 is 96. Technically, that would be the next target. In theory, are we going to get there? Don't know. But I would argue it has never been allowed, for as long as I've been doing this for over 35 years, to find real price discovery because the banks have been naked shorting it. But now they are challenged by countries and institutions and sophistication that it never had challenged before. And they're standing for delivery. No one ever did that. None of the traders did it. None of the players did it. It was done typically to hedge positions, right? A
Right.
miner who's pulling metal out of the ground and won't have it for months can forward sell its production, get paid, and then when it's done, deliver it. That's typically what it's used for, right? To hedge exposure. Now they're saying, yeah, you know what? We're going to stand for delivery instead. And the heat's getting turned up quite a bit. So, yeah, I would expect silver to, I would call it the value of a generation. And I say that with as much sincerity as I can give you. This is not about telling people to buy silver from Miles Franklin. Sure, I hope you do. But I'm telling you, buy it no matter where you buy it from and get it in your possession, because the biggest money in the world is making an overt attempt to do just that. Don't do what the talking heads say. Do what the biggest money in the world is doing and get it in your possession.
Like to say, follow the money, follow the money, follow the money.
Man.
You know, so much of the dark pools out there and the private equities and solvent wealth going in, and offices is going. I mean, they're just going deep and buying a lot, accumulating a lot of gold and silver right now.
I would say that fiat currencies inherently are all meant to die, and the dollar is one of them, and it's being inflated away to worthlessness. I mean, it truly is. Like I said, in the 6 weeks that the government was closed, they added 500 billion in debt, and the last trillion was in debt was accumulated in 71 days. It took over 200 years to do the first trillion, and now we're doing it in literally 2.5 months. It's accelerating. And when you realize that 1 trillion seconds ago was 31,688 years ago, that's a problem. When you realize that the US now has a record 18.6 trillion in household debt, up 60% over the last decade, where auto loan delinquencies are at their highest level in 15 years. Subprime auto delinquencies are their highest level in 31 years. Student loan delinquencies at an all-time high. Credit card delinquencies, the highest in 14 years. In October, 36,766 foreclosure filings. People getting kicked out of their homes. That's 3% higher than the previous month, 19% higher than the same time last year. The economy's in trouble. We talked about the bank. We've talked about all this stuff. You don't buy gold and silver to become wealthy. You buy it because it is wealth that has outlived 2 world wars, the German hyperinflation, the Great Depression, every pandemic, everything.
Mm-hmm.
And that's why you own it. And I think it's time for people to understand that it's time to think outside the box. As Rick Rule, I'll leave you with this, says, if you are not a contrarian, you're destined to be a victim. And if you save in dollars, you're destined to go broke. So it's about assets. He who owns assets is called the Cantillon effect. He who owns asset wins. And that's what I would tell people to do. Don't save in dollars, save in assets, even if it's an ounce of silver, an ounce of gold, whether it be Bitcoin, whatever assets mean to you. It's better than keeping it in dollars, which are really just being destroyed in value through irresponsible fiscal and monetary policy.
Yeah, we saw it with the Roman Empire. We saw it when England was, when they were the dominant dollars and money at that point. Now in the United States, and now it's dwelling in our hands, and it's going eastward.
It is. So. There is no question about it. I think you're smart to realize that. I would say there's a pattern every time. It starts with governments overspending, like the Romans, like we are. They borrow to cover the gap, or they debase the coins. They cut them smaller. They take the metal out. Michelle McCory just did an interesting deal on our channel about pennies and what it really means, how they're taking the penny out. But it's more interesting. Watch it. It's a short one. Talks about this. But then after that, central banks print to keep it all going. We see that. The currency weakens. We're seeing that. The insiders move to hard assets. We're seeing that. The middle class gets crushed. We're seeing that. The system resets as its mathematics would demand it. So that's where we are. And this is, the winners in all of this, they're the ones who are closest to the money printer. That's the Cantillon effect. And those are the people who take that money and buy assets as the currency continues to debase. Those assets become worth more in the face of a falling currency. So you're right on that. And it's the same pattern every single time. I'll say this. One, silver has been reclassified a critical mineral by the US government. Two, the amount of gold and silver coming into the country over the last year is off the hook, and it's the biggest money in the world bringing it back in. Three, you have the Treasury Secretary, a self-proclaimed gold bug. You have Judy Shelton saying they're going to peg gold to the Treasury market. I could keep on going, but I'll just simply say this. When the central banks have been front running this for the last 5-6 years.
Right now, silver is signaling real historic strain. The Silver Institute confirmed that 2025 is the fifth straight year of structural deficits. Industrial demand is surging, mining supply is flat, and global stockpiles are shrinking. The LBMA is reporting some of the lowest available inventories in more than a decade, while India, the world's top silver consumer, is paying record premiums and doubling imports to meet demand. SLV, the world's largest silver ETF, recently hit a 20% borrow rate because shares were nearly impossible to find. At one point, there were 0 shares available globally. Metals desks say backwardation lasting 6 weeks is a clear sign of physical tightness not seen outside crisis periods. Andy Schectman's warning has been the same for years. Silver has been intentionally suppressed because the West needed it cheap for weapons, tech, and strategic stockpiles. But suppression only works when physical supply is abundant, and today, that supply is disappearing. At the same time, BRICS nations are building an alternate system where digital currencies convert instantly into gold, bypassing SWIFT and the dollar. China and Saudi Arabia are constructing vault networks along the Belt and Road for fast gold settlement. This shift could strip the West of its ability to control gold and silver pricing through paper markets. Technically, silver is coiled. The 45-year cup and handle formation points toward a long-term target near $96 once silver clears $50 decisively. Even Bank of America's public target of $67 may be conservative. What makes Andy's view so compelling is that it lines up perfectly with the data we're seeing today. Shrinking inventories, soaring premiums, sovereign accumulation, and a weakening dollar. When physical supply can't meet demand, the paper price has no choice but to explode.
I think that moving out into the future, you're going to see gold and silver much higher than people think possible because it is going to be reintegrated into the system. In the BRICS, they're using it as a settlement system. In fact, I've talked a lot about mBridge, the cross-border payment system that allows countries to trade with one another free from SWIFT intervention. The first trade happened yesterday, I want to say, where it is now fully optimized, where the central bank from the UAE traded with the central bank of China. Now let's play that out. China would buy oil from the UAE and use digital yuan and trade over mBridge, which is a cross-border payment system that settles in 7 seconds at a 98% reduction in fees, no SWIFT intervention. The digital yuan has been made immediately convertible into gold. You don't have to go to dollars first. By the Chinese government. They are building, the Shanghai Gold Exchange is building a series of multi-jurisdictional vaults all around the Belt Road Initiative for this purpose. The first one was completed in Hong Kong. Hong Kong, in order to take gold out of China, has to go through Hong Kong. So the UAE could take those digital yuan, send it to the Shanghai Exchange, and boom, take the gold right away. The second one is under construction right now in Saudi Arabia. So the Saudis can do the same thing, take the gold right out of the vault right there. And they're building them all around the Belt Road, which is 150 plus countries, 70 plus % of human population, 50 plus % of global GDP. It is what they plan on doing. They will trade with everyone over a cross-border payment system that is free from the SWIFT, that the dollar is not compatible with, and they will settle trade and currency imbalances in gold, which is tier 1. And this is why they've all been buying it. This is why they're setting up the rails for it. And the only way the US can compete is to peg the treasury market to gold and let go of the reserve status of the dollar because of something called Triffin's dilemma, which is a theory that says as a reserve currency, you'll always run trade imbalances. The world needs more dollars and we can give them through trade alone. Your manufacturing will die because as more and more countries have to buy dollars to buy oil and stuff, they have to sell their currency to buy ours. Ours gets high, theirs gets low. And over time, it's just so much cheaper to have your stuff manufactured in other countries like Vietnam or China because of the strength in our currency, that your manufacturing gets hollowed out. Now, what did Trump say in his press conference yesterday? We brought back 18 trillion in manufacturing. We're going to get it all, establish new facilities and this and that. Great. You can't sell it to the world unless you get rid of the reserve status. What did the nitwit dinglebat previous chief economic advisor for the Biden administration say, Jared Bernstein? Watch him on X trying to explain how treasuries are made. It's the most humiliating thing I've ever seen.
It's funny.
He wrote a report called Dethrone King Dollar. He advocates we can't be the reserve currency anymore. It's killing us. Vance, vice president, just wrote on White House letterhead, same thing. It's been a boon for the consumer with cheap goods and low interest rates and high asset prices. Everyone buys our treasuries and uses our dollar to buy, to buy everything. And we take, we get the benefit of cheap price goods, but it's killing the manufacturing. It has to end, and it will end. And I think the way you do it is by letting gold go to the moon. That's all the talk of the gold revaluation. This is Tether, who issues stable coins on the Genius Act that's backed by U.S. Treasuries. The interest on the treasuries is not transferable. Tether already has $13 billion in gold. And who's the CEO of the new Tether stablecoin division, USA Tether, but a man named Bo Hines, who was Trump's crypto czar till August? Wink, wink, nod, nod. You're going to buy gold, and we're going to work out a deal. Maybe that gold will end up in the treasury. You're going to make a fortune, but you are going to take the interest that you keep on all the movement of stablecoins backed by U.S. treasuries. You're going to buy gold. You're going to buy Bitcoin. I think Bitcoin will be used to pay down the debt, so you'll get rug pulls constantly. And I think gold will go to the moon because that's what they want, because a higher gold price means a devalued dollar price. How do you sell your goods to the world? In a devalued dollar. Even Wall Street, even Main Street's talking about it. The news is saying the debasement trade. They want to debase the dollar, which means let it fall in value so they can pay down the debt and bring back manufacturing. How do you bring back manufacturing at a zero upfront cost? I know. You back the back end of the treasury market with gold, 5, 10, 20, 30, and a 50-year that Judy talks about, redeemable in gold, no interest, no upfront borrowing costs. And now you can bring back and build new facilities with no upfront borrowing costs, and 20 years deliver the gold. What if the price of gold goes way up by then? Oh, that's easy. Not only does it benefit all the central banks of the world who've been buying it, it benefits us. So the moral of the story is you save in dollars, you're going to go broke. And you can take any asset you can think of, anything, and go back 20, 50, go back to 1971 and take what that asset cost in gold then versus what it costs in gold now. And you'll see prices on everything are falling in gold terms, but they're going way higher in dollar terms. And that's the point, is that the dollar, which we measure things against, like right now, the dollar is down 7 or 8% against the dollar index. Yet it's down 70% against silver and 60% against gold. Gold and silver are the real barometers, not a basket of crappy currencies. So don't save in dollars. The biggest money in the world is repositioning into commodities right here in front of us. And now the U.S. government is doing so as well. And it now becomes a policy issue and a national security issue. And I think we haven't seen anything yet. Honest to God, I believe that.
Wow. That's a lot. I've been stacking since 1998, and I'm a happy camper, and I totally agree with you. You said something that I'm going to quote. I'm watching on another channel recently. You said this: "Buckle up for what's about ready to happen to silver."
Yeah.
Here's the truth. Insiders are not hoarding cash, bonds, or tech stocks. They're hoarding physical metal. They see the debt crisis building. They see currencies losing purchasing power. They see vaults draining, and they know that once a delivery failure hits the silver market, the repricing will be instant, not gradual. Silver isn't about getting rich quick. It's about protecting yourself during a historic reset. And according to Andy Schectman, that reset has already started. The biggest money in the world is quietly preparing for the moment when the West can't deliver metal, and the price finally breaks free from manipulation. And here's the key question. With Andy's answer, what happens when a Western bank can't deliver physical silver? Confidence collapses, the paper system cracks, and silver revalues overnight, not in years. This is why Schectman says, follow the money, not the headlines. Watch what the insiders are doing, not what they're saying. If you want real updates, real analysis, and real signals before the mainstream catches on, subscribe right now. turn on notifications. We're tracking every vault withdrawal, every delivery cycle, every sovereign purchase, and every crack forming in the global silver market. Don't wait until it's too late. Be early, be informed, be ready.